Welcome back. Now above 24,200. At the day's low, the Nifty was closer to 24,100. So there has been a little bit of a pickup in the market. But again, in context of the overall fall of 200 points, it's not much. The mid-cap index is still down close to about 1,000 points. But let's get a corporate conversation going. Birla Corp has reported a weak set of Q2 numbers, but mildly better than street expectation. The costs were lower, particularly the power and the fuel costs. The volume has declined 5% on a year-on-year basis, but the company remains cautiously optimistic about the coming quarter. We have with us Aditya Saraogi, CFO of Birla Corp, joining us on the show. Thank you very much for joining in. So the first question is on the volumes. For the first half of the year, you've degrown by nearly 2%, and it appears that you're shifting your attention more towards profitability versus market share. What is your guidance on volumes? And what will your market share now stand at? Guidance of volumes for this year, second half of the year and FY26.
Yeah, so thank you for having me on the show. Good morning.
Good morning. Thank you for joining.
Yeah. So in Q2, the volumes were quite tepid because of one, monsoon. Secondly, the government spending was also held back. So we expect those factors to reverse. And in the second half, in fact, we are expecting a smart recovery in terms of volumes and demand. So we are expecting our volumes to be at nearly 9.910 million tons in the second half, which will mean a growth of about 18% compared to the first half.
Okay, so 9 to 10 million tons is what you're expecting in the second half. That would take your total to around 17 to 18.38 million tons.
Yeah, 18, slightly around 18 million tons.
Okay, this compares with FY24 volumes of 17.61 million tons that you did.
Correct.
Okay, so you are saying that there has been a recovery in government spends, which was not the case that you saw in the first half. But what has the demand been like post-monsoons, Mr. Saraogi? Is there any sign of slowdown in the activity, or that has improved as well, especially in your core markets like UP and MP?
No, we are expecting a gradual recovery. We are seeing a gradual recovery in the market in terms of demand. The prices have not moved much, but in terms of demand, definitely we are seeing a gradual recovery. And post-Diwali, we expect the demand to pick up even further.
How much higher would it be, Mr. Saraogi, say if in monsoons it was X? How much higher are you seeing demand increasing in the second half? Have you seen it already so far in Q3?
Already we are seeing some recovery, but we expect the recovery to gather pace post-Diwali. And on that basis only, we are expecting the volumes to be significantly higher compared to the first half.
But sir, for the full year, you would still be at a growth of about what, 2 to 4 odd percent. The best case is full year volume growth.
Yes, between 3 and 4%. Correct.
Okay. But this comes on the back of, a fairly muted year that you had in FY24, when I think you're, can you give us a little longer picture in terms of what kind of volume growth the company is going to see going ahead?
See, it is really dependent on the industry. If the industry goes at, let's say, 7 to 8%, we should also go in that region, plus minus 1%.
Okay. Yeah. Let's talk about your EBITDA per ton, Mr. Saraogi. You're guiding for a recovery in the second half. You've spoken about recovery in demand as well come by in the second half. What are you factoring in on higher realizations and low cost? Like, what's the EBITDA per ton that you're looking at? First half, it was 532 rupees per ton. What is the number for second half, and what will you end the full year with?
So, in the second half, we are expecting the EBITDA to be higher by about 170 rupees compared to first half. So that will take us to around 700 rupees in the second half.
And what would the reason be for that? What are the triggers?
Yeah, the trigger would be mainly higher volumes and better realizations, and we expect the cost to be benign. So the cost should be flattish.
Okay. So what's the outlook on cement prices then?
No, cement prices definitely we expect to increase in the second half, even in this quarter and definitely in the fourth quarter.
By how much, sir?
So that would be about 200 rupees, between 170, 180 rupees a ton.
That will be the improvement in the cement
Yeah.
prices that you'll see.
Yeah.
Okay. All right. So let's talk about your Capex plans, the net debt target by FY25 end. In quarter one, it was around 3,125 crore rupees. The spends were targeted at 700 crore rupees. Can you give us what would the numbers look like by the end of FY25 and FY26 as well?
I can tell you about FY25, it should be around 3,000 crores. In FY26, we are going to embark upon the next phase of expansion to 25 million ton. So it is slightly premature to give a exact number on that.
So will that increase your debt? How are you planning to fund that expansion plan that you have in place?
That will be a part of accrual, internal accrual as well as debt. We have got some treasury assets also, 750 crores of treasury assets. We have got some non-strategic investments. So that also we can use. So it really depends.
And what would be the fresh capex starting FY26 of 25 million tons? How much do you anticipate you will require?
For the entire 5 million
Yes.
tons,
Yes.
that will be spread over a couple of years. But maybe that will be around 4,000 crores.
And spread over how many years, according to the initial
2 years,
estimates?
2 years. 2 years.
2 years.
Okay.
Yeah.
Mr. Saraogi, you know, one trend that's happening in the cement industry for the last couple of months definitely has to be consolidation, right? The two big players going ahead and doing all those acquisitions. Is this impacting you? Is it impacting the other players in the industry? Are you all losing market share? If not a longer-term impact, are you seeing a near-term impact on the industry in terms of realizations and market share?
Not really. In fact, all the players are holding their ground. So I don't think it is impacting the market share in any respect.
Have you lost market share, sir?
No. We are around the same level. Maybe in some market there's a marginal loss, in some market there's a marginal gain. So on the whole, there is no major difference, I would say.
Mr. Saraogi, if there is some offer that comes to the promoters, the one that came for Orient Cement, for the similar offer for Orient Cement, do you think they would go ahead with it? Is this something that you would be open to?
Well, it will not be fair on my part to comment on that. But as much as I know, my promoter will not be interested.
Thank you, sir, for joining in. That's the word coming in from Birla Corp. Q2 was a bit muted, but the management is expecting a recovery in volumes, expecting a recovery in realizations and the EBITDA per ton. And they are going to, they're planning a capex of nearly 4,000 crore rupees, which starts in FY26. The stock, it's a weak market, so the stock is down 1.9%. Get into a break. We'll come back and discuss market technicals. Soni Patnaik of JM Financials joins in on the other side.